I really hope I win today. Let's see here. We kind of have like an A plus setup right now. So we currently have a 2.7 gap to the downside. So quite literally a great size gap. It's a perfectly medium sized gap. We're opening at third deviation of lower VWAP of previous session close. That's also a really good sign of calls. and yeah, yesterday was a sideways day. The previous day was a downwards day. Hopefully today's an upwards day. We're taking calls this morning. I haven't had a win in a while, so I'm really looking forward to a win. Yeah, this is gonna suck if we lose, but that's trading. What are you gonna do about it? Market opens in around 25 minutes, so hopefully pre-market stays the same, and we can take some calls right at market open, and hopefully get a take profit. So yeah, gonna stay disciplined in my risk management and take a smart position size. And yeah, I'll catch you guys when I have trade results. Today's gonna be a fun day. Besides trading, I'm going to a Seattle Mariners game because go Ners. They won last night 4-2 against the A's. Luis Castillo is pitching today, so that'll be fun. Going into Seattle today. Hype. All right, I'll see you when I have trade results. Bye.
I wonder how many comments I can get under this YouTube video with like other people telling me what I should be doing better, correct, what I should not be doing, that's wrong, and maybe start listening to it because it's not working. So, if you've got plenty of strategies that could tell me what I'm doing wrong, let your boy know. Because your boy is now, what is that, like 5 days in a row? Just red, hella loss. Sucks. Really, really sucks. I'm not one to get negative about it though, because at the end of the day, it's only a $300 cash account. Am I using a $100,000 funded account that I paid $300 for? No. At the end of the day, over this whole entire course of a month-ish, I've only lost $100. So, at the end of the day, this $100 loss over the course of how long this was, it's minuscule to how many dollars that other traders are losing when they first start out. So I'm going to take this week, take this whole weekend to reflect on my strategy and just do way more back testing than I should be, because this really sucked. Not really happy about this trading week. The account is now down 30%. I gotta get something figured out or else this just isn't gonna work. So if you have a great comment on any strategies that I could implement into my strategy, that'd be mucho helpful. For the most part right now, I just need to go get a coffee and relax and read a book. Going to the Mariners game tonight, so go Ners. And move on with the day, baby. All right, so I didn't film much of the day because I didn't feel like doing it. Mariners lost, but it was a fun game. I enjoyed my time. I'm gonna do the trade review. It's gonna be a really quick trade review, but then I wanted to get into something that I kind of feel like is a little fun topic that I'd probably titled this video, and that is my hot takes in trading opinions that I have that a lot of traders don't have and could disagree with me on that. So I'm gonna hop in this trade review and we're gonna get into it. All right, getting into my hot takes. I got 4 hot takes, and basically I've created a bullet point list that's just gonna talk about it all. But coming in at number 1, it is most trading strategies are too complicated. Look, here's the thing. This could be anything. This could be indicators. This could be price action. This could be all those like price charts that you see where they open a sheet of paper. It's like a cheat sheet with a million different patterns. If you are not able to distinguish direction based on less than 5 reasons, your strategy is too complicated. There are too many variables. There are too many things that could be going wrong. Here's the thing. My confluence strategy has three pillars: VWAP, gaps, trend. That's it. But you see online that these guys have, and I'm not dissing them, I'm just saying they're bad. They're not bad. They're just not what I think is correct. Is that they'll have 4 different indicators: EMAs, VWAPs, RSIs, and then they'll have your price actions. So your gaps, your engulfing candles, your falling pennants, your triangles, your bands. Like, there's too much because there's going to be contradicting theories, and
when you have 4 indicators pointing up and 3 indicators pointing down, and it just doesn't go your way, what are you going to blame? You're going to blame one of the 3, or you're going to blame one of the 4 for being wrong? It's just not necessarily a good way to go about it, and I think most trading strategies are too complicated. This is also something to do with learning curves. When it comes to learning curves, we're humans, we're monkeys. We need to dumb it down. At the end of the day, when we want to teach trading, we want to expand the niche of trading. When we overcomplicate it and make it seem as if we're learning Mandarin, no one's going to want to do it. It's like accounting, and no one wants to do accounting. People want to trade and live their Wolf of Wall Street life, which isn't even trading, but it's something that people want to do. Simple strategies allow for more effort being driven towards risk management, emotions, and ultimately making the right decisions, rather than just constantly being in this analytical like loophole of just, oh, if that and that and that and that and that, it's just not going to go anywhere. And I don't think it's healthy too, because you get too overworked by the markets and it's not simple. There's many strategies out there where they wake up at 6:30, they'll take a trade, and they will take the trade at like 8 o'clock, and they'll just set their alerts for that price target or that stop loss or that take profit, and they'll just go back to bed. It's not the best strategy. I think you should probably watch your positions, but like, people do that. It's the simplest thing ever. They make money in their sleep, and they might lose money in their sleep. But at the end of the day, it's simple. It doesn't hurt their brain, and they could be profitable at it. I'm trying to do that, but I'm not doing that right now. Number 2, risk management is more important than your strategy. And I say this because there's this thing called options. And when you look at an options chain and 0 DTE options, if you're able to catch volatility, you don't need a high win rate. You actually can do it profitably with a low win rate, because I've preached this many times and I've said it many times, but if you're able to catch volatile parts of the market, you can make money with a 33% win rate. All you need is a 100% take profit and a 50% stop loss. That is actually the maximum that I'm taking anymore. I don't want to take any more. I don't want to take any less. I don't want to take any more, and I don't want to lose any less. But taking 70% and 80% profits is what I'm sort of leaning towards. And also I'm leaning towards price targets rather than profit targets. I'm still struggling with that. I think that's a problem with me. But I've had a strategy before where I'd literally wake up, flip a coin, and I would either take calls or puts, set a 100% profit and a 50% loss, and I was profitable for a little bit. And ultimately it didn't work because I was way too heavy in my position sizing. And that's what I mean. That strategy worked because over time I was catching and getting lucky. But when your position sizing is too high and you end up catching into a 5 in a row red or 3 in a row red or 6 in a row red, you're ultimately just going to liquidate your whole account, and that luck is now out the window. Was the strategy really simple? Yes. Was it set out and planned and easy and like you knew exactly what you were doing every single day? Yes. Was it smart? No. That's gambling. You were practically gambling. I was practically gambling. I might still be gambling, but I think risk management is more important than your strategy. So that's number 2. Number 3 is the best traders are actually boring. Boring in the sense that it's not a fun activity for them. Boring in the sense that it's not a thriller. When you look at the markets, you shouldn't be constantly heart beating. You should see it and almost feel as if you're watching the Mariners lose 7-0 to the A's. Well, that happened. Oh, nice, I won. Oh, that happened. Oh, nice, I won. It's not going to be a, like, obviously when you win, some people could show emotion, but like during the trade, you shouldn't be screaming at your TV going, no, 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 or yes, 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 or or I didn't know that was going to happen. Oh my God, look what happened. Like, there's many reactions that you can have towards trading, and when it's boring, it's usually being done correctly. When it's exciting and when it's emotional and when your heart's pumping and adrenaline's going, it's usually probably not the best. And I've caught myself in these situations, and I've caught myself in boring situations, and I've caught myself winning and losing in both. And that's ultimately something I need to like figure out, but it's something that I agree upon, and that trading should be boring. Because when you teach trading, it should be almost like teaching chess. It's a game that is so boring to the people that don't know about it, but it's super beneficial once you learn it. So that's the third one. And the last one, I feel like shouldn't be a hot take, but for some reason it is, because there's so many gurus out there telling you should do it. But you shouldn't quit your job. You shouldn't quit your 9 to 5 to do day trading, even if you're profitable. Yet. Now, here's the thing. With capital gains tax, I feel like ultimately you need to reach a point where you are beating your income in order to do it by a larger margin than you think. Here's the thing. Say you make $50,000 a year after taxes and after everything. You make $50,000 a year take home. At that point, I feel like you would need to make literally $150,000 trading. And here's why. Say you've reached $50,000 a year in trading and your account is worth $50,000. And what happens when you all of a sudden lose it all? Not saying that someone who would rack up $50,000 a year would just throw all their money into a put or throw all their money into a call, but I'm saying in the cases for like FTX, or a trading company goes down, or the bank that actually has said that you have this funds and they don't have your funds. You get like Silicon Valley Bank ran. What happens if that happens? When you've relied so much of your money on trading that you are completely cooked. Now, here's the thing. I'm no Dave Ramsey. I'm no Graham Stephan. I'm no personal finance genius or novice. I'm a finance major that's currently learning things and getting a bachelor's degree and basically just getting an indoctrination. But I'm no financial advisor when it comes to this, but I know that it's not smart to leave something stable for something that isn't. Stability is one of the most important things when it comes to life. And if something in your life is telling you like, oh, I'm bored and I need to be going and throwing my money away in different ventures that might fail or not, that's completely up to you. But it is a objective like idea and a statistically proven idea that is not a smart idea. So yeah, those are 4 hot takes. And then yeah, you can come to the comment section if you want to talk about it, because I love talking in my comments. I think it's genuinely kind of fun. But going to the trade review that I had, just a disappointing trade. So if you see on screen, which you probably can, we took calls at open. We set our take profit at the gap fill, which was only around a 1.4 gap. It would have netted us about 50%, I want to say. And ultimately, we saw a little bit of drawdown, saw back up, just normal volatile movement to the side. And then right around, what is that, 9:51, we saw dumpage, just straight dumpage. And this sucks because, you know, when you look at the daily time frame and you see, you know, where we're going, it looks almost out of the ordinary to see that big fat red candle just going straight down. So it's one of those days where I really hate reviewing these days because I need to figure out what went wrong. I have to look at, you know, financial news, reports on major companies like Google, Nvidia, and all them. And then I have to keep updated on the Trump tariff thing. It just kind of sucks. And I feel like this is one of those days where I keep saying this and I hate saying it, but I feel like it was one of those days where it was out of my control in terms of what I was able to see on the charts. And I hate doing that. It's not something I like to say because I feel like I'm wrong about it. You know, I get hella comments about how bad my strategy is. And to be honest, it is bad. I'm losing money. I'm not seeing something that I should be seeing, and it sucks. But ultimately, that's what I went with. It's what worked in the past, and it's what I think can work now. So I'm going to stick with it. And to all those that are commenting saying, you're stupid, fine, I'm stupid. But at the end of the day, I've only down $100 on this trading account. $100. I've spent days losing 500 before. I've lost thousands in weeks. This is nothing. This is all a learning curve. I'm not really a big fan of paper trading because I feel like you don't get the real aspect of it. But this is something that I will gladly take on the chin and something I'm gladly going to learn from. And if it costs me $300 to learn this, so be it. So that's the trade review. That's the end of the video. Sorry I wasn't a full-time YouTuber today. Just didn't feel like it. This week's trading sucked. Really sucked. So I'll catch you after the weekend. Peace.